morning and welcome to the July 2025 edition of Tech Tuesdays with Darrow Associates, now on our fourth year of this series. I'm Jordan Darrow, and it's a pleasure to be here with you. This is our monthly IR Technology and Services Showcase held on the first Tuesday of each month from 11 to 11:30 a.m. Eastern Time. Our events are a one-stop destination to find the right products and service providers to maximize your effectiveness and ensure you have the tools to achieve your investor relations goals. Each showcase provides a continuing education platform for our partners to demonstrate their cutting-edge offerings and best practices to our staff, our clients, and other friends of the firm. A different IR tool is covered each month. Our sessions are provided in a virtual format with a screen-shared presentation led by our presenting partner. And this will take about 15 to 20 minutes. That will be followed by about a 10-minute Q&A session. For this month's session, we're pleased to have Jim Collins of Excelsior Capital Partners with us to talk about his firm's virtual conference and independent equity research platform. As he talks with us, you'll see his screen and all audio lines will be left open so that you may ask a question at any time. If you don't want to be heard or have background noise, please disable your microphone and silence other devices. Jim, welcome to Tech Tuesdays with Darrow Associates, and thank you for being our partner. I'll now turn the event over to you so that you may present your platform to our viewers.
Okay, great. Thank you, Jordan. Thank you for the opportunity. So as Jordan mentioned, my name is Jim Collins. My firm is Excelsior Capital Partners. This is Tech Tuesday. So what I did is I went out on a limb, so to speak, and I had AI generate my presentation for me. So which doesn't mean I actually know how to run the slides on my phone, but let's see if we can make it work. Anyway, it was an interesting exercise, but as the background, what my company does is multifaceted. So we do asset management for individuals. That's Excelsior Capital Partners. We also do corporate access, which is obviously where I would interface with someone like Jordan and his firm, Darrow Associates. And through that, I have a YouTube channel on which I do CEO interviews. I've done virtual conferences, and my background is I wrote equity research, or have been writing it in a way for the last 32 years. So that's everything for me starts from that idea of being, the stock nerd. We don't do as much long form research as I used to. Now I have two newsletters, and the subscription info for both those is at the end of the presentation, which you'll see. But that's my background, the stock jockey. And so hopefully what happens is that I find these very interesting, obscure companies in a world where we really only focus on 7, or actually a lot of days like today, only 1, Tesla. And I was an auto analyst for 11 years. So that is an interesting side note there. I get a lot of questions about Elon, more than I can answer. But anyway, that's my process. That's what we do, is we're dealing with these very interesting, oftentimes, but not always, smaller companies. And for them, I mean, really in this world, as Jordan knows, they need exposure. They have great ideas. They're great entrepreneurs. And we can make a lot of money by investing in them. How we usually do that is via preferred stock. Not always. We also own common stock. We own convertible debt. We own straight debt. I mean, you name it, we own it. But that niche in a market that, again, is dominated by common stocks, and 7 of them, is really how I've built the assets of my firm and how we've performed very well. First half, we were up 11.42%. The S&P 500 was up 5.5%. So we're doubling the market. And what we have is a tailwind of these, most of them pay quarterly, of these payments that give us a head start to the rest of the market, which is yielding almost an all-time low, as the S&P 500 is at an all-time high, really doesn't have. So we've got cash, and I reinvest that cash, and that's how we do it. So that's a long-winded intro, but let me start sharing the screen now so we can go through very briefly the presentation that AI generated for me, and hopefully they did a good job. see if I can get it here. There we go. Yes. Tech Tuesday presentation to Darrow Associates. It's actually Darrow Associates, not Darrow and Associates. So already AI has made one mistake. Anyway, so this tells you what my firm does, the focus on income investing, and as well as the corporate access, and just basically, I believe in portfolio concentration that maximizes income and returns and gives us, as I said, the tailwind that allows us to keep reinvesting in these very interesting, somewhat obscure, not by definition, but they kind of are, smaller companies. And to do that, I also give them a platform, CEO interviews, virtual conferences. I have a podcast, as do most people these days. And, we're just trying to get those ideas out there. The next one, this goes through the advantages of preferred stock investing. I won't give all these. It's basically dividends on steroids. So I think most people are cognizant of the benefits of income investing. What this does is preferreds are basically a hybrid between common and fixed income. So what I like to do is buy them at a discount, which means that if there's some kind of a liquidity event and they go back to par, then you get capital gains, and the income itself comes on periodic payments, which are almost always quarterly. So that's how I build my portfolios. The next one, that's Rush, is what happens is that we get a portfolio concentration. So not Neil, Getty, and Alex, but three small companies that I promise you've never heard of. Their preferred stocks make up 2/3 of the reference portfolio that I have for Excelsior Capital. Each client's portfolio is managed separately on a bespoke basis, but we do have a reference portfolio, which I call the fund, which is the one that's up 11.4% this year, and throws off just boatloads of cash. So what happens is that 2/3 of that fund are composed of 3 preferred stock holdings. So
Jim, going back to that Rush photo there, did AI pull that out for you, or is that something you inserted after the fact?
that was AI. I just typed in Rush, and
Oh, you typed in, okay, so it knew to.
It did. Unfortunately, Neil Peart is no longer with us, but that is a good photo of those guys. Great band. So those are the big 3 of rock and roll. The big 3 of what we own at Excelsior Capital Partners are preferred stocks. Via Renewables, which the ticker symbol is VIASP. AI did correctly scour that from the internet. Secondly is NGLC, and thirdly is CDRC. So amongst these like island of misfit toys, V Renewables is now a private company, but still has publicly traded preferreds. Its founder, Keith Maxwell, took them private. Basically, it's called V Renewables, but they source energy to retail and small business customers. Some of it comes from windmills, some of it doesn't. But we were buying it at like 40 cents on the dollar. Today it's trading at a slight premium to par, so like 102 cents on the dollar. So that's an example where we would have made and have made the capital gain, plus we're getting these quarterly payments every 3 months, which in this case are floating rate. NGLC, NGL Energy, which is a limited partnership, doesn't even own their NGL terminals anymore. They sold them last quarter. So what they do is wastewater disposal and recycling for oil and gas drilling, most of which happens for them in the Delaware Basin, which is in Texas and New Mexico. And then finally, Cedar Realty, CDRC, is part of another company. It was, again, that hasn't existed as a separate company since 2022. It's part of another company called Wheeler REIT, but on a ring-fenced assets basis, generates cash. They own supermarket anchored strip malls, and that one is trading at about 60 cents on the dollar. So a double-digit yield for us, has performed very well. And again, it's just not to bore people and, not talk about robo-taxis and things and humanoid robots, but again, this is what I'm doing is like lathering, rinsing, and repeating every 3 months and reinvesting these payments. But the companies have to be able to make the payments in the first place. So that's where my background comes in. And what I'm doing essentially is credit analysis. And that's working well. Again, as I say, we're up double digits this year. Secondly, these are smaller, so these would make up the other 1/3 that aren't covered by via the NGL Energy and the Cedar Realty. GTLSB, which is Chart Industries mandatory convert. So that converts on December 15th. Chart Industries is merging with a company called Flowserve. So essentially, from an income basis, Flowserve pays a dividend, Chart doesn't. Management has said that they will continue to pay that dividend as a combined company. So that becomes an income play. That merger should close just about when this thing mandatorily converts into common. So again, that's December 15th, and that's been a great performer for us income-wise. The second one is GPMTA, which is Granite Point Mortgage. That's one where the common GPMT is trading at about a 70% discount to NAV. What do they own? They own commercial real estate. Everybody hates that. But again, they have worked through the properties that they end up owning, which is called Oreo, which you don't want. They're selling those. They generate cash and they pay their dividends every quarter.
All right.
Final one.
So Jim, in our, not to interrupt here, but in our, we've got another 10 minutes or so on the presentation side.
Yep.
Can we focus more on your corporate access activities? And do you take your preferred stock investments or any investments that you have and put them into the corporate access buckets?
Oh yeah, absolutely. So that's, yeah, sorry, I was rambling. I can talk about this stuff all day. Nobody wants to hear that. But so my background, I worked for a company called Donaldson, Lufkin and Gen Red in the 90s until they were purchased by Credit Suisse. So I sort of think of Excelsior as kind of the DLJ merchant bank model. And, when we really liked a management team, and usually specifically the entrepreneur, we would offer them corporate access, equity research, which I wrote, all manner of exposure, and we'd buy the stocks and usually the bonds as well, which preferred as a hybrid. So that's what I'm trying to do, is sort of identify these really interesting and lucrative stories and then just, sort of blast it out in a multi-channel format. So that's where the virtual conferences come in. That's where the CEO interviews come in. My channel is called The Rising series on YouTube. And that's where my newsletters, I have 2 of them. That's where mentioning these companies comes in. I've also written for Forbes, Real Money, Seeking Alpha in the past. So again, all that, it's a very good question, Jordan. All of it is sort of a multivariate approach to great ideas and great managements and great businesses that generate free cash flow and generate positive returns on equity. So that, I mean, and that, as I said, that was the old DLJ model from the 90s, where if we liked you, we were going to be all over you, and you would get all sorts of different methods of exposure to the, we call the buy side. So that would be Fidelity, et cetera, where they have trillions of dollars that they can throw at these ideas. And, if that is in fact what happens, then everybody, the CEO is happy with me because I made him look good on YouTube. The board of directors is happy with him because the stock price went up. My clients are happy with me because their portfolio values go up. And it's just this kind of virtuous circle.
So tell us, you mentioned that you're sort of like the DLJ on a merchant banking side. Are your followers on YouTube and the podcast series and your newsletters, are they individual investors or institutional investors?
So we have, I would say it's half and half. And again, this is another DLJ term, but we do have individuals, which is where that would be something like a single family office, for instance. you know, through, this is way too long for this discussion, but for some reason, it's not because I can speak Portuguese, because I can't. Half my assets are actually in Brazil now. And again, these are sort of like borderline oligarchy people that like to invest. And a lot of them are entrepreneurs. So they've had an exit, maybe multiple exits of their own. They understand the struggle. They understand how difficult it is to build a business. And for me to give them exposure and people can see it's happening. I mean, obviously, you know, you always wanted to buy Apple when Steve Jobs had that little iPhone in his hand, not 16 years later. So we try to get them early.
Got them early. We like that.
Indeed. And that's, you know, again, I think that it's sort of editorial, but it actually impacts my day-to-day life as a portfolio manager. I mean, I don't care if Elon and Trump are friends or enemies. It makes no difference, but nobody is buying their cars. Their deliveries are going to be down 11% this quarter. They were down 14% last quarter. So as a car analyst, I know what that does to your cost structure. And but as a human being with a smartphone, that's all I see. So what I'm trying to do is offer an alternative to the 98% of what you're seeing in financial news, which is, you know, star driven, mega cap driven, and just, you know, BS driven, in my opinion.
So talk to us about your virtual conference series. How many do you do? What's the format? And
Yeah.
what's the audience like? The investor audience that's participating on the viewer side.
So one of the things, I mean, this is going to sound sort of groveling, but one of the great things I've and has helped me really build my business has been going to these conferences, meeting people like Jordan, Darrow Associates, and the third-party companies that represent these companies, which again just don't get much, if any, airtime, do a tremendous job. So sorry to grovel there, but that really is who is bringing the companies to me. Plus, just, you know, I run screens and all that other stuff like blocking and tackling, and through that, because Jordan has a much better Rolodex than I do, we start to get, you know, a couple thousand people watching these things, participating in these things. And again, it's sort of, it's so hard to say. I mean, I've had companies approach other companies, which M&A, only because they saw them on one of my virtual conferences. I've had people that, you know, literally have $1,000 in their account that put all of that into one small stock that did really well, only because they saw them in my conferences. It's very difficult to generalize, but it's, you know, I call it the thin edge of the wedge, thin end of the wedge of capitalism. So I like to facilitate that.
So how often are your virtual conferences held?
So yeah, I mean, that is totally based on demand. So the podcast itself is a couple times a month. Virtual conferences would be, it'd be twice a year. And, you know, again, I go to the real conferences, things like LD Micro, who are good friends of mine, and on and on down the list, Roth, Think Equity, what have you. And what I try to do there is I'm a little bit of a remora. So I'm trying to find some interesting CEOs and get them together and get them to do my conference, which is much more interactive. You know, because again, I'm really not trying to sell you anything. I would like to manage your money using you as a general sense. So, you know, I'm sure Jordan is doing very well, but and for that, I charge 50 basis points, so 0.5% per year. So, you know, all of this eventually, it's capitalism. It has to end up in revenue, but it is much more fun for me to do it with emerging companies and entrepreneurs than just, you know, ETFs.
When you hold your virtual conference, how many companies are participating in each event?
It would be 10, more or less. You know, you might have somebody drop out at the last minute or
whatever. Okay. And what's the format there? Is it a full-blown presentation, and that's all that they're doing? Is it presentation plus one-on-one meetings?
Yeah, a presentation, and just like this one, with hopefully less rambling than I'm doing, but 20 minutes a presentation, 10 minutes Q&A. And then what happens, because I am not a brokerage house, nor do I want to be one, the one-on-ones tend to happen on an idiosyncratic basis. I mean, I will start getting a bunch of emails or a lot of WhatsApps these days, and people just saying, can you hook me up with this guy? He tells a great story, and then I act as the facilitator for that.
Okay, so the one-on-ones are really after the fact. It's not
Yeah,
part of the direct conference, on the day that it's held.
that is true. I mean, I'm not Goldman Sachs, so it is easier for me just to do 10, 30-minute presentations in a row from a tech perspective.
Okay.
And then obviously it's recorded, obviously it goes on YouTube, which is where everything lives. I don't compete with Google. Why would you do that? And then, it's evergreen, so it's always up there.
So after you do the conference, when they're recorded, you said you put them on YouTube. Is that the same YouTube channel that you have the Rising CEO interviews?
It is indeed. Yeah. So it's called XCAPS, the Rising series. So the actual URL for that is in the last slide of my presentation, but most people just find things on Google anyway, because Google owns everything. So if you just type in XCAPS, the Rising series, they'll get you there.
Okay.
But as I said, the address and all my contact details are on the last slide that Jordan has.
For the podcast series, tell us how that comes about and the format of that, and how often you're doing them. Is there a topic, or is there a type of company you're looking for that?
Yeah, again, that would be back to emerging growth companies. So that might be what we call SMID, small and mid cap, micro cap. I honestly don't care what size they are. I mean, if they're really small, it's because nobody's paying attention to it, and therein lies the opportunity. But that is twice a month, and that is a more in-depth conversation. So probably no slides. We all see enough PowerPoint decks. Really just me conversing with the CEO.
Yeah. So that'd be more like a fireside chat format.
It's exactly that. It might go, maybe that will go 45 minutes. Probably 30 is optimal, but that is totally depends on the conversation and how we're doing.
How many followers do you have on these various social channels that you have?
Yeah, it depends. I mean, probably, well, not probably, but my best would be LinkedIn, which is kind of lame, but I have 27,000 connections there. And LinkedIn, when it started, before Microsoft bought it, they used to tell you what that meant. Like if each connection, they used to do the geometric progression. They don't do that anymore, but that's the biggest. On these, for instance, the last one I did, which was a company called Almonte Industries, which is basically dominates the tungsten market. And tungsten has huge strategic importance, especially since 90% of it is from China, Russia, North Korea. That particular interview with myself and Louis Black, the CEO, has, as of this morning, last time I checked, 1,100 watches. So, and to me, that's, I mean, I do get some analytics from Google that, I are proprietary to my firm, but I always consider a watch much more impactful than a page view. So that was a great conversation. It's just, tungsten is hot. It really is.
Well, that's a good expression, a good statement you just made there. A watch is more impactful than page views.
Sure. And again, I'm not trying to make it too easy for people. I'm trying to act as the point guard and maybe get them to do their homework. Plus, I know how to do the homework. That's the only job I've really ever had, is researching securities. So I can help you, but at some point you have to take some kind of step and say, look, I want something that's smaller than NVIDIA and Apple. Inherently more risk, but hopefully more return.
So that's just about the largest stock on the planet that you picked there. So
Yes,
we'll all hope that our clients can become the next NVIDIAs.
absolutely.
All right. So you finally, among your various corporate access points, you mentioned newsletters and subscribers. Talk to us about the newsletters. What do you write on there? It's probably going to be the same thing that you're interviewing, but let's just be sure of that. And
Yeah.
what's the frequency of the newsletter publication and how many subscribers do you have? Are they paid or non-paid? How does that work?
Yeah, that's all paid. I mean, there are two of them, which essentially I merge, but there's one called Jim Collins Yield Signs, which is $1,000 a year, and there's one called Hoax Portfolios Update, which is shorter. It's $100 a year. They both come out Sunday. In terms of subscriber accounts, things like that, I consider that proprietary. But what's not proprietary is my model portfolios. So that's kind of my joy in life, is making these things, giving them ticker symbol style names like Hoax, for instance, which absolutely destroyed its benchmarks for 3 years, and composed only of hydrocarbon names. So what that does is that I use Google Sheets, and anybody who is subscribing to either of these newsletters is automatically enrolled. So there is 100% transparency. There has to be, in what I'm recommending, how it's doing every week. So obviously I do a little write up on it, but yeah, I mean, if you are linked in to that spreadsheet, you can check any day. Am I winning? Am I losing? What kind of theme do we want? Yes, I do a lot in hydrocarbons, but that's not the only thing. And so all sorts of manner of different ways to play what's going on in the world and what you think is going on in the world. Because what I always say is that for individuals, and I have a lot of friends who work at places like Fidelity, whatever, where you've got to beat your benchmark. If you beat your benchmark by 14 basis points, you own half of Boston. For individuals, it's different. I believe all individual investing is thematic investing. So I will do these thematic model portfolios. I promulgate them through my lists. I put them out on Google Sheets so anybody can see them that is a subscriber. And we just do it. It all starts from some kind of idea. And also the last thing there is that gives you the idea, gives you the ability to go long and short. So I have my new one, which is called Next Hoax, which took over from Hoax. I'm still riding having TSLQ in there, which I sold when it doubled, which is the 2X inverse Tesla ETF. So, when that thing was at like 480, it was looking pretty ripe for a short. So we did that. We made a little money. We're happy. We'll see what happens tomorrow with Elon. Honestly, I cannot.
Yeah, it's a complicated story. That's for our next interview. But we're just about out of time, but I want to make sure that we field any questions from our group here. Does anyone want to jump in with a question or type it into the chat area? We'll just give that a second to come through.
Yep. Opened up the chat window here, so yeah.
It seems like we are.
Jordan, I actually have a question.
Okay.
Jim, my name's Michael Backel. We have a client. They're exploring or expanding some preferred stock for select holders, and just leveraging off your technical background on that. How is the accounting? Do you focus on, when you talk to the CEOs, do you focus at all on the accounting treatment for these preferred stocks? Traditionally they have other forms of debt that were just interest expense. So
Right.
when you move that interest expense over to a preferred stock, convert it to a form of equity to improve shareholder equity on the balance sheet. How is that treated? How do you focus on that, even if it's accrued? If they're not actually able to pay, do you get
Yeah.
companies in your some of these smaller companies can't actually pay the cash for these preferred, but they have them out there.
I'd like to say I've never had one that's been in arrears, but we've had. And so if you go back to um, the presentation, NGLC, for instance, was non-money good for the better part of 2.5 years. They sold some land that they owned in New Mexico. They've caught up. They're money good. They pay every quarter. It's awesome. I love it. There's another one that I own called Care Cloud. The common is CCLD. The preferred is CCLDO. Again, they went non-money good. They cut some costs. And so now they're back to paying monthly again. So it is important to know that it is a dividend. It must be declared by the board. This is not some kind of like human right. But in terms of having that sort of flexibility, not so much from financial accounting, but from CFO perspective, to actually pay the dividends, as opposed to having to book the interest expense is helpful for them. And so also that gives you the ability to have a lot of different flavors, converts, mandatory converts,
Right.
that are, for the people I'm dealing with, mostly individuals and individuals, that gives them a little bit of an upside play that, when their friends are bragging about their NVIDIA, they can say, hey, I've got 60% upside here if things work out the way that I believe they will.
But these guys, when you have the preferred, they're accruing it quarterly, just like they would an interest expense, just on a different line item as you're looking at. Okay.
Yeah, I'm big. My background is, CFA and all that equity
Right.
research stuff. So I've always been a big cash flow guy. So if you look at the statement of cash flows, that's where you see it toward the bottom is preferred dividends paid.
Okay.
So you don't see it as much or at all in the income statement, which can confuse people. But again, we know where we are in the capital structure. I tell people this, that's a little bit my role is to be a teacher. We're junior to straight debt. We know that. And senior to common equity, although, hopefully it'll never come to that.
Great. Thank you so much for that.
Okay, thanks. Thanks for your interest.
And our final, given time limitations, our final questions comes from Jack, who asks, what are some of the most overlooked sectors or opportunities within the small cap space today?
Wow. I mean, I'm a huge resource guy. I love assets. I love assets that generate cash flow. So yeah, I mean, that brings me back again to the old hoax days in oil and gas. That is next hoax, for instance, is 8 hydrocarbon names that all throw off boatloads of cash. Some are common, some are preferred. Other things I'm looking at that are not just hydrocarbons would be commercial real estate, which is a little risky for sure, and even some, what we would call health tech and med tech, where every single one of these small companies, and again, I mentioned Care Cloud before, CCLD, they have a Gen AI product. You just, you don't hear about them because they're not $3 trillion like NVIDIA, but there are smaller companies in tech that are generating lots of cash flow. So, sorry, rambling answer, but favorite side is always assets and assets that generate cash flow. Natural resources is a great way to do that. Also, never forget about intellectual property as a natural resource as well.
All right. Thank you, Jim. You've given us a lot to think about and a lot to work with you on here. But for now, that's going to conclude our monthly installment of Tech Tuesdays with Darrow Associates. Thanks to Jim Collins of Excelsior Capital Partners for speaking about his firm's virtual conference and independent equity research platforms. And thank you to all of you who participated in keeping your IR knowledge base at the cutting edge. Please join us in August when we talk with New to the Street about their pay-for-television interviews and programs. Until then, we trust our Tech Tuesday sessions are helpful in implementing your IR strategies. Thanks again for joining us, and goodbye to everyone.